Something doesn't add up tonight. Grain market's trying to push higher, livestock keeps climbing, energy is firm, and yet, underneath the surface, pressure is building in places producers can't ignore. The question isn't whether markets move today, the real question is, are we walking into a setup or a trap? Because what happens next could decide margins, marketing plans, and risk heading into spring. Let's break it down. Corn futures are trading near 427 3/4, up slightly on the day. Not a breakout, but not weak either. The pressure point here is momentum. Corn keeps attempting to stabilize it, but buyers still lack conviction. If demand improves or weather risk appears, corn has room to climb, but without it, rallies could stall quickly. Soybeans showed a stronger movement, trading near 1133 3/4, pushing higher on the session. The signal here is demand versus reality. Beans want to move higher, but global supply remains heavy. If export demand doesn't accelerate, this strength could fade. But if buyers step in, soybeans can shift sentiment fast. Wheat is trading near recent levels today, no collapsing, not breaking out, just holding. What traders are watching now is global competition and weather. Wheat has been searching for direction, and whichever force moves first, supply risk or weak demand, will likely decide the next leg. Oats slipped today, trading near 303 3/4, under mild pressure. Nothing dramatic, but weakness in smaller grains often signals broader hesitation. The grain story tonight is simple. Markets are stabilizing, but conviction is still missing. Cattle continue to show strength, and this is becoming one of the clearest trends in the market. Live cattle are trading near 240.87, pushing higher again. Feeder cattle climbed as well, trading near $367.15. The pressure point here is supply. Tight cattle numbers continue supporting prices, and until supply expands, dip may continue to find buyers. But here's the risk. Strong cattle markets can shift fast if feed costs change or demand softens. For now, the trend remains intact. Lean hogs moved lower, trading near 93.90, under noticeable pressure. The split between cattle strength and hog weakness is something traders are watching closely. If hogs stabilize, livestock strength broadens. If not, it creates divergence across protein markets. Crude oil is trading near 64.87, slightly higher on the session. Energy stability matters more than it appears. Fuel costs influence input prices, transportation, and overall production economics. If oil climbs, cost pressure increases across agriculture. For now, energy is firm, but not breaking out. Weather is beginning to shift toward the next critical phase for producers. Current patterns remain mostly stable, but temperature swings and moisture distribution are what traders are watching. If dryness develops in key regions, markets respond quickly, especially grains. If moisture improves and conditions stabilize, price rallies often struggle. Weather hasn't triggered markets yet, but it remains one of the most powerful forces moving forward. In ag news today, global grain demand continues to show mixed signals. Some buyers are stepping in, but not aggressively enough to fully shift sentiment. The risk here is hesitation. If buyers wait, markets stall. If demand accelerates, grains could move quickly. What traders are watching, export pace and global consumption. Cattle supply remains historically tight, continuing to support higher prices. The consequences, strong cattle markets, but also rising cost pressure for producers managing feed and replacement animals. What could change this is herd expansion signals or demand shifts. Markets appear stable on the surface, grain steady, cattle strong, energy firm. But underneath, volatility risk remains. If weather shifts, demand surprises, or macro pressure appears, markets can move quickly. The key right now is positioning, not reaction. So what does tonight actually tell us? Grains are stabilizing, but still searching for direction. Livestock remains strong, supported by tight supply. Energy is steady, not driving markets yet. Weather remains the wild card. The real question is this stability or a setup for movement? Because markets rarely stay quiet for long. Markets don't move randomly. They build pressure, they signal risk, and they reward those paying attention early. And right now, pressure is building. Thank you for spending your night with me. This is Boots and Bushels, where markets meet reality.